When I started trading, I wasted years and a lot of money chasing magic indicators and secret strategies. And now the boring truths I'm about to share with you in this video, they are the only reason that I trade profitably. The catch is that most traders, they're chasing excitement. They want an exciting strategy, something that feels like magic, something that makes them feel like they're the smartest person in the world so they can feel like the main character in a Wall Street movie. The problem is that excitement kills consistency in trading. It's the boring and the repetitive stuff that actually works. So in this video, I will walk you through the 4 boring truths that actually make you profitable and explain why most traders ignore them and show you how to use them to stop sabotaging your own success. The first one: being good at something is not about doing extraordinary things. It's doing ordinary things extraordinarily well. Think about what it actually means to be an expert in anything. We could use sports as an example. When we talk about the legends, Jordan, Kobe, LeBron, Steph, whoever, we tend to think that they're doing something magical. But when you really slow it down, they're not. They don't shoot and dribble the ball differently from anyone else on the court. It's the same mechanics, same fundamentals. What makes them different is how many times they've done it. Taking so many shots, practice the basics so relentlessly that they make it look like magic. And the exact same thing can be said about bodybuilding. Does Mr. Olympia lift the weights any different than other people? No. Same exercises, same curls, same squats, same basic movements. They're just done more consistently, with more intent, with more precision, and more discipline than anyone else. So being an expert doesn't mean doing extraordinary things, but just doing ordinary things extraordinarily well. It's about mastering the basics and the fundamentals and doing them over and over and over again until they just become part of you. Being an expert is simply executing the basic and fundamental stuff to perfection, and then doing that basic stuff at scale. And in trading, it's the exact same thing. You don't need a magic strategy or some secret indicator. You honestly just need to master the most basic skill in the game, which in my opinion is market structure. If you understand how to read market structure and you can consistently spot when that structure shifts, then that's it. That could be your edge, and that's all you need. Number 2, he who chases 2 rabbits will catch neither. A popular saying that you've probably heard before, and it's true in trading as well. If you try to catch every little move in the market, you will chop yourself to pieces and you'll end up catching none of them. You'll slowly bleed your account out from 1,000 paper cuts. When I first got into trading, I thought that the goal was to trade as much as possible and to be involved all of the time. I'd take setups in the middle of nowhere just because I was always afraid of missing out, missing some move. Whatever little move the market made, if I wasn't in it, I thought of myself as a failure because I was unable to predict that specific move. But as traders, we should never try to predict every single move. You should never care about every move. You're not supposed to catch them all. The market is allowed to move without you, believe it or not. So your job is not to predict everything. Your job is to build a process so that you sometimes, with statistical probabilities in your favor, are able to predict where the market is going. As long as you can predict where the market is going sometimes, and stay out of it when you have no idea, that's an edge. And once you've found your edge, you have to remember that it's not something that's going to present itself all the time. Don't get stressed if you don't see a setup every hour of every day. That's what an edge actually is. It's not a magic strategy that works 24/7 in every market. It's a repeatable condition that gives you a positive expectancy over time and over a large sample size. It's something that you have back tested and live tested with results to prove it. Something where you understand why it works and not just that it works. And it's something that you can spot in the wild with confidence while it's happening and not just in hindsight. An edge is rare by definition. If you think you found something that works every single day in every single market condition, you probably just haven't tested it enough yet. Different market conditions require different tools. So unless you have multiple edges and strategies, then you are going to have days and maybe even weeks where the smartest move you can do is to do absolutely nothing. I went from trying to trade everything to not touching anything unless a setup really just feels like a sniper shot. I'll gladly watch price move without me for hours, even days or weeks, if it doesn't fit into my plan. Think about it like hunting. A professional hunter, he doesn't sprint after every single noise in the forest, right? He stalks the one prey that he knows that he can take down cleanly, right? If he tries to shoot at everything, he'll just make noise, scare away the target, and come home with nothing. And number 3, your trading style has to fit you or you'll never stick to it. And when I say trading style, I don't just mean your strategy. I'm talking about how you trade. And that includes the actual strategy you use when you trade, what time frame you trade on, and also what assets you're focused on. There was a period where I tried trading purely off of indicators because that's what some guy on YouTube said you should do. Just load up the indicator, wait for the buy or the sell signal. And I absolutely hated that. I felt completely disconnected from the market. I felt like I was just following a traffic light system I didn't understand, and I didn't know what actually made the indicator trigger these signals. I think a lot of people think that this is what they want, just like an automated trading system where they can just blindly click buttons, but trust me, it's not what you want. You don't want to blindly follow someone else's indicator and become reliant on it. You want to learn to understand the markets yourself, because if you don't, then what are you going to do the day that he takes his indicator down, or if it stops working? Then you've built your whole trading around something that you don't understand, and that's just a recipe for dependency and disaster. You're simply doing yourself a huge disservice by cutting corners like that. On top of that, all of these indicators, these magic indicators that you see advertised on YouTube and everywhere else, they don't even work half of the time, right? So right away, trading an automated indicator signal that I have not built myself did not do it for me. I needed something that came from me, trade ideas based on my own read off the market. It's the only way I can have confidence in a trade. But from there, you still need to find your style. What do you like? Do you like pure price action? Do you want structure supported by EMAs or VWAP? Are you a trend follower? Do you trade breakouts? Or are you trading ranges? Do you punish other people's mistakes by trading order flow? Do you look for mean reversion setups? For me, it all comes down to market structure most of the time. When the market is trending, I follow the move using my EMA system. And if the market is consolidating, I switch gears and I use order flow and look for mean reversion setups instead. And both of my strategies are supported by auction market theory, which ties everything together. But again, that's just how I trade. It fits how I think, how I want to trade, how I like to manage risk. It's important to know what fits your style and your temperament. If you don't have a system for reliably trading breakouts, chances are that the one time you try to trade a breakout, you're coming from a place of FOMO, and you'll convince yourself afterwards that breakouts don't work because you failed once. But really, the only problem was that you don't have a framework for it. And there's so many different strategies and tools to choose from. And if you've already found one that makes sense to you, that's great. Just stick with it and refine it. And if not, or if you haven't been able to find anything profitable yet, then I'll be more than happy to teach you my strategies and my approaches to the market in the future. So just make sure that you're subscribed to the channel so you don't miss it. So strategy is important, but what time frame you trade on is also essential. And I won't go into details about time frames here because I've already made a full video on that topic. You can go watch that one after this one. But when your style fits you, you can take a losing trade and not spiral into the system doesn't work, right? Instead, you think that, all right, that was a good setup. It just didn't play out this time, and that's okay. If you're forcing yourself into a style that feels unnatural, then every loss is going to become a reason to quit and doubt yourself, right? And that's how you end up constantly having to start over and chase a new strategy. And number 4, a trading plan is not a nice to have, it's a need to have. When I started, my plan was basically get coffee in the morning, open the charts, see what's moving, feel FOMO, and then try to jump in somewhere blindly. That was it. No structure, no rules, just raw emotion and a lot of wishful thinking. And it's honestly embarrassing to even talk about this now, but at the time I thought that was just how you did it. I thought I could just log on and get a feel for the market and just blindly react to whatever it was doing at any given time. But the reality is that without a real plan, you can't even say that you're trading. You're just really just gambling with extra steps. A solid trading plan isn't something you build once and then just forget. It's a tool that you refine constantly, and it needs to answer 5 questions every single time you're thinking about taking a trade. The first one is bias. Ask yourself if you are bullish or bearish for the day. Which direction has the best odds? And then narrative, you have to ask yourself why. Why are you bullish or bearish? Why does it make more sense for the market to move that way today? And that could be anything. It could be that we're in a clear uptrend on high time frame and price is sitting at major support. It could be that the market has been ranging for a while and now we're sitting at range high in premiums, so it might make sense to look for shorts instead. These are all just examples that you can look for. And then number 3 is location. Where will you look for that trade? Because even if your bias is right, if you enter at the wrong location, you're still wrong. You could be bullish for the day, take long, and then the market pulls back and forces you out of the position before making the real move. Being too early in trading is the exact same thing as being wrong. So location for the trade is really important as well. And number 4, obviously, entry. What's your trigger? for executing the trade. Again, this could be different things. It could be that we've entered your high time frame location or point of interest, and now price has broken structure on low time frame. Or it could be a huge liquidation spike into your point of interest and you want to fade that. Again, we all have completely different systems, but you just need to define some sort of trigger for your trade in your plan. And number 5 is risk. Where is your trade idea invalidated? Where are you going to close it? Where do you stop out? If you don't know, then you can't size properly. And that's how you end up taking huge losses that you can't control. So I went from just feeling FOMO, trading everywhere, to if I can't answer all 5 of these, I don't trade. If there's one of them that's not clear to me, then that's not a setup that I'm willing to take and participate in. It sounds restrictive when you hear it like this, but it's actually the opposite. Having a clear plan makes everything easier because it kills FOMO. It reduces the doubt that you might feel mid-trade. You know, when you open a trade and all of a sudden you're starting to see, oh, I didn't see this, I missed this, and what if this happens? Like, all of that goes away. So it gives you peace of mind once you're into position. When you have a plan, you're not sitting there staring at the candles thinking, oh, should I hold? Should I exit? What if this happens? What if it does that? You already know what to do because you thought about it before money was on the line. Having money on the line clouds your judgment like crazy. So you want to plan out as much as you can beforehand. And I think the best way to think about this is to treat trading like what it actually is. It's a business. You are the owner of a one-man trading business, and no business survives without a plan. A real business, they know what they sell, who their customers are, what their margins are like, how they'll market their products, how they'll deliver their products. They have systems in place, processes, forecasts. Imagine walking into an office in the morning where no one knows what you're doing. No one knows what product to build. No one knows what to sell. They're just winging it every day. That company wouldn't last a week, and neither will your trading without a system. And the thing is, your first few plans, they will suck, right? When you start to plan all these things out, they will suck, and that's fine. You don't need a perfect plan to start. You just need a consistent habit of planning. Because like we talked about in truth number 1, mastery of anything is just repetition. You take something basic, you do it again and again and again and again, and eventually you become really good at it, but only if you actually do it. So those were 4 non-exciting things that have helped me tremendously in my trading. I was going to include many more actually, but I think the video would have been too long, so instead I'll split it into parts. These were the first 4. All of them, I would say, incredibly important. They might not be flashy, as I said, but trust me, this is the stuff that actually works. If you can internalize just these 4 things, mastering the basics, focusing on one edge, building your style, and having a real plan, then you're already way ahead of 90% of traders out there. But again, with these 4, we're just getting started, and I'll have more for you in another video very soon. So if you found this helpful, make sure that you're subscribed so you don't miss part 2. And if you're watching this video in the future, you can probably already find part 2 on the channel. I'll see you in the next one.